Sean Egan with us from Egan Jones. Sean, good noon to you.
Good noon to you. Thank you, Tom.
We talk about this merger. I thought you had just a great note on it, many others as well. Is this a good thing for American wireless cell phone users?
It probably is, although if there aren't some controls on prices, you can expect them to increase. We would not be surprised that AT&T provides comfort to the Justice Department that they're not going to increase prices for the next couple of years.
I mean, when they provide comfort, that means they'll say, we'll do this, we'll do this, we'll do this. There's a lot of game theory here, isn't there? I mean, AT&T going, what will T-Mobile think? And AT&T going, what will the government think? And the Department of Justice going, this and that. What's the game theory as you see it right now?
Well, I think you have to step back and address the question whether or not this deal is going to go through. In our opinion, it is that they have no focused opposition. The biggest issue is perhaps the increase in prices, and AT&T can address for that. The other issue is that you have nobody that really wants this not to go through other than Sprint, and Sprint is going to have to realize that they're in an untenable strategic position and start picking up the pieces and addressing it as quickly as possible. This
idea of strategic position, folks, a theme through this hour. Let's go to dreaded first chart and get the landscape that Sean Egan works in each and every day. Spreads and ratings really back to pre-crisis. Sean Egan, is that a correct statement when we look at BAA industrial to 10-year that we're almost back to normal?
In fact, it's very difficult to find domestically an industry that's going to be under pressure. Perhaps airlines a little bit because of the increase in fuel prices, but we do a service for some clients whereby they ask us to identify attractive shorts, and there are relatively few safe shorts domestically. It's fairly difficult to find.
Well, let's bring up a note then, and let's get back to the discussion of the moment. AT&T, T-Mobile. Sean Egan writing yesterday, Sprint Nextel's competitive position will weaken if AT&T and T-Mobile are allowed to combine. The Department of Justice might want some comfort that the market doesn't degrade into a duopoly. Come on, Sean, it's going to be a duopoly, right?
In our opinion, it's not going to be a duopoly. It's going to be a three-party firm, three-party industry. The three-play is likely to go into four-play in the next couple of years, and it's going to be AT&T, Verizon, and an additional player. We think it's probably going to be Comcast that'll be in there. It would be smart for Sprint to start speaking to some of the other players that could be that effective third party, so that they don't lose completely their competitive position.
Did they overpay? A lot of talk about that, and Keith Moore will be on, folks, with that. Did AT&T overpay for the privilege of T-Mobile?
In a narrow sense, yes. In a broader sense, no. But keep in mind that this is a critical strategic step for AT&T to establish their dominance in the strong competitive position in this industry. And they'll be well suited for the next 20 years after this deal goes through.
But, Sean, the market voted yesterday. Bring up chart 2. The market votes for the seller. I mean, Deutsche Telekom, a big a sigh of relief. We had someone on yesterday talking about, I hate this word, the synergies. They'll take out $3 billion. How does this fold into their credit rating, into their issuance of debt? They've got that terrific cash flow to work off of, don't they?
Deutsche Telekom should be celebrating because, you know, it very well could have been Sprint that AT&T teamed up with. Sure, you have some problems with the Justice Department, but Deutsche Telekom really was very lucky with this. Over the long term, AT&T should benefit. And the real next issue isn't whether or not this deal is going to go through. If anybody looks at it critically, I think they'll conclude that it will. It's going to take some time. The real next issue is who is going to be the third player in this industry. Our money is on Comcast stepping up and offering, and the three-play going into four-play, and Comcast being an effective competitor.
I mean, Comcast has got a little bit on their plates, to say the least. We'll come back and talk about that. Sean, when you look at the debt and the ratings and the issuance, does this change the game for AT&T at all? Is their debt quality the same?
It slips a little bit, but if you have a time frame beyond, let's say, 3 or 4 years, they're in great shape.
I want to bring up right away on an elegant chart. We showed this chart yesterday. Bring it up right away. Sean, I was surprised normalizing back 10 years. AT&T and Sprint, AT&T and White, Both of them have gone essentially nowhere in 10 years, with Sprint really suffering. Why is the wireless such a difficult business if they have those terrific cash flows in our monthly bills?
Because they have to take that cash and reinvest it in the business to keep up with the increasing demand from video usage.
Are these dinosaurs mating then? If we see AT&T and T-Mobile, they can't make money. They're struggling. They've got regulation to worry about, including simply making the merger happen. Are these dinosaurs mating?
It makes a lot of sense to mate because they have massive capital expenditures. If they combine networks, they can basically cut out about 50% of the cost and deliver a better service. That's the argument that they're going to be using down in Washington, and I think it'll resonate.
Let's bring up a chart 5 if we can here, and this is an interesting function, Sean. I just took Verizon, excuse me, Verizon, and I compared it to AT&T. The line going up is a Verizon-friendly relative performance. And you can see the iPad illusion on the right side there as Verizon does better than AT&T. Which is a better credit right now? And do you want to tell me which is a better stock right now?
You know, with this combination is going to take some time for AT&T to absorb it. We're assuming it's going to go through, and we think it's highly likely that it will. So I think Verizon probably makes more sense both from a fixed income and an equity perspective. That is, if you're looking to make money, however, that's probably not the best place. It's very interesting, but there's a lot more movement, both positive and negative, surrounding these two giants rather than looking at the two giants.
Let's go back to Comcast. I like that banner, folks, that came across. Thanks for that, Sarah. We got this banner on Comcast as the third player. How does Comcast get in the cell phone business?
The easiest way is to wait until Sprint is beaten down a little bit more and combine with them. Granted, they just did a major acquisition, but over the next 3 years, they're going to look for another major growth area, and it makes a huge amount of sense for them to be able to compete on 4 dimensions and not just the 3 dimensions that they have right now. The critical mass continues to grow in the industry, and it's not just on the consumer side, it's also on the business side. You need all 4 facets built out to succeed over the long term, and we think that Comcast will be forced to make a strategic move in the next couple of years, and Sprint is the most likely candidate to do that with.
Did you hear, folks, we make it up here as we go. That's part of what we do at Surveillance Midday. Did you hear that snap of the fingers? That wasn't me. If I'd snapped my fingers at Victor, he would have thrown his camera at me. Victor, here we have Sprint. Sean Egan talking about the moonshot up, the collapse, the stability at 20, and then here's the recent collapse. I mean, come on, Sean Egan, $4.55. How low can it go?
It can go lower.
$4.55. They could do a reverse stock split like Citigroup, right?
Absolutely. I think the strategic issues are paramount here. Where is the industry going to go? Where's it going to be in another 4 or 5 years? Who are the likely winners? Right now, AT&T and Verizon are in the driver's seat, and you have Comcast that certainly is a strong company, needs that 4th dimension, is going to be looking for it, and Sprint is at a dead end.
I'm dying to ask you this question. What did you think of the Citigroup reverse split? Folks, your stock is 40. You do just 2-for-1 stock split. It goes from 40 to 20. Okay? The reverse split's the other way. You're at 4. You do a 10-for-1 split, and miraculously your stock's at 40, and you feel better. Sean, help me here. Why did Mr. Pandit do this?
It's optics, Tom. You know, when you go into...
Please make a banner, Sarah. Egan, it's optics. I love that. Go ahead.
You know, you hate to go into a meeting and talk about your $4 stock price. It's a little bit embarrassing.
I mean, it's really, I was really amazed when I saw that. So they're going to do a reverse stock split here. Tell me about the overall credit market right now. Everybody wants to get into the credit rating business. You and I have talked about this before on the show. Where do we stand going into the summer of 2011 with everybody piling into the Sean Egan space?
Well, I think that there's a bifurcated market. There's a traditional market where you're paid by the issuers, and you have the well-established, very difficult to manage, if not unmanageable conflict. And then you have the other space where you're paid by the investors. We've been in that space for the past 15-plus years. We think that's the right way to do business. It's proven out in our track record, and we think over time the market is going to become more sophisticated and realize that they need at least two ratings, one independent and the other one non-independent. I think the market is moving in that direction as we speak.
We saw a market moving this morning, Sean, about 9 a.m. Ireland and Portugal perking up again. Spreads wider. Let's go to the chart here. New angst in Ireland. I think I spelled angst right. A-N-G-S-T. That's close. Ireland-German 10-year spread. It widens out, really getting out near record wides. Sean, I know you do more of a corporate thing. Are national sovereign credit ratings, are they believable?
I think they're under a lot of pressure, and the sovereign story is going to be played out over the next 3 or 4 years. In our view, Europe is not, there's structural problems in Europe. It's not being handled properly. In fact, what you need is a currency printing entity behind both the banks and the countries. For example, in Ireland, you need the EU or the EU bank or the ECB behind it, so that investors don't have to worry that their deposits are going to just be no good in the future. Right, they haven't done that yet, and they need to. Yeah,
here's the intraday Irish piece 2 days ago, yesterday ago, and here we go wider today, and we stabilize as they shut down in Europe. But this is really, this gets your attention into month end here. Sean Egan, would you buy peripheral debt in Europe? Would you buy Portugal or Greece?
Tom, that's a tougher trade because you don't know whether the EU is going to step up in a huge way. They're trying to. The safer trade, in our opinion, is to be short the countries that are going to be supporting the peripheral countries, because there's no way that they can't be under pressure. And we're referring to Germany and France. They're going to have to support the bailout.
Perfect. Sean Egan, thank you so much.